You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. Be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. I love that music because it means it's time for TWIFO This Week in Futures Options, a program that pretty much has it all. Maybe you want some ags, probably got you covered. Maybe you want some equities, got that too. Maybe you want metals, maybe you want, who knows, dairy, fluid milk, lean hogs. Who knows what's going to be up our sleeves every week. That's why you have to tune in. TWIFO, every Friday, 1:30 p.m. Central, 2:30 p.m. Eastern, via the old mixers if you want to get it live, or just tune in whenever the heck you want on the podcast player of your choice. We don't judge. As long as you're tuning in, listening, asking questions, all that fun stuff. We love you. You guys love us. It's a fun love fest here on TWIFO. And you know what's not loving, of course, is all my usual cohorts, my usual stalwarts on the show today are scattered hither and yon. Sean, again, in some other far-flung locale. I don't even know what time zone he's in. My buddy Nick, I think he did something to his knee. I don't know. I'll have to check in. So send your thoughts and well wishes to him. I think he's recuperating over there. But never fear, listeners. We got an able stand-in at the ready to talk some volatility and all other fun stuff. He's my old friend, the Rock Lobster, Mr. Andrew Giovinazzi from OptionPit.com by way of Carmen Line Capital. Mr. G, have you fully rested up from the option block just an hour or so ago, or half an hour ago, I should say?
I like to say I did, but I had a scatter shot session with one of my mentees, one of my favorite guys. So we try to solve as many problems as humanly possible in 30 minutes.
You're supposed to rest your voice between these segments, or not do more talking. What's wrong with you?
You know what? I'm in demand. What can I say? That's all there is to it. When you're in demand, you gotta go when the demand is hot.
I'm the only crazy person supposed to be talking 24/7 over here, but we'll see. I think we can muddle through it together, sir. We're going to get into equities and all that fun stuff because that is indeed your wheelhouse, Mr. Rock Lobster. Before we get there, we were talking last show about what's going on. By the way, of course, you guys want to follow along, play the home game. It's easy to do just that. CMEgroup.com/TWIFO, TWIFO. That's where you get all the live reports, all the updates, all that good stuff. If you're listening after the fact and you want to maybe play those expirations a little bit to set it back to where we are today, so you can see exactly what we're seeing over there on the old Quick Strike. And of course, if you want to kick the tires and light the fires for yourselves, quickstrike.com, QIK, actually quickstrike.net, bandtix.com, easy for me to say, the places to go. But we were talking last week about all that action going up on CME over the last month in terms of OI. OI was exploding kind of across the board. We broke down a lot of complexes that were lighting it up. Well, that continues to be the story. Go figure. We got a lot of tumult, a lot of volatility across the broad spectrum of the marketplace, thanks in a large part to all the trade war consternation. And of course, that's playing out yet again with more record open interest records. These coming courtesy of a couple of days ago, the 21st. Overall, CME setting a new record, 140.5 million. That's total. That's options and futures, listeners. And rates lighting it up, 100 million, over 100 million on the OI. That's a record there. And options OI, 85.5 million. That's a new record for them as well. So the options story continues to grow on the futures options side of the fence. And speaking of growing, Mr. Rock Lobster, the volatility, it just keeps growing. It refuses to die. We got this little bit of trade war premium coming into the markets last week. It kind of shot us up. We saw a lot of hand-wringing, a lot of consternation going into Friday where there was, this is the make or break day for the deal. I had some people in the vol space telling me this is going to be like a Brexit. This is going to be crazy town. Once it hits the fan, we're going to be rocking and rolling. A vol explosion, a vol implosion. Who knows what we're going to get, but it's going to be moving. And we didn't really see a lot of that. We saw kind of a softer implosion, a little bit of air coming out of the balloon, if you will. And then, of course, that kind of trailed off throughout the week. We saw vol coming off, and then we're right back to where we started again here today. In fact, we're up a little bit. Coming into today's show, in fact, just coming into showtime, we were at a 16.5 in the VIX. Now we're at almost a 17.5 out there. Again, VIX cash listeners. So we're over 2 points higher than where we were this time last week. So the vol giveth, the vol taketh away. The vol is giving again. It's very generous. We're giving ourselves a lot of vol. The volatility of volatility also moving up quite a bit, up to about, in the 90s again, 93.5. That's about 2 points higher from where it was this time last show as well. And of course, our old friend RVX, aka the Russell 2000 VIX, also up, as you might imagine, about 2.5 points as well. So we saw that spread coming into showtime. We had widened out dramatically, up to about 4.5 points. So that's probably coming in a little bit. These numbers are moving throughout the day, but still that spread up, widening out about a point over the course of this past week. Mr. Rock Lobster, we'll start there. I know you spend your days. One of the reasons I wanted to have you on today is because you spend your days in an asset class, a product category that is moving a wee bit today and indeed this week, which is, of course, equity volatility. Start us off. Give us a little bit of a rundown. What's lighting up your personal tape over there in equity volatility land, and then we'll get to some of the different highlights, sir.
So the first thing is and this is probably a theme that maybe futures guys is just, a lot of future trading is you're trading the spreads, right? Corn, beans. I just met guys that were spread traders. I met probably like some great spread traders. Unfortunately, that was never something I did. just because I seem to have enough trouble getting myself in enough trouble options. But if you're looking at like VIX futures right now, you're seeing some what I would just call some really flat, crazy flat curve. We're back to the flat curve where December is 1777 or 1754, and we're looking at a June future of 1745 and cash 1760. So once again, this is where at least from a vol product point of view, where the traders throw up their hands and say, we don't know what's happening. I think the flatter the curve, the least the flatter at least the futures for at least VIX futures, just an observation. That's vol traders saying we don't know what the heck's going on, but most likely the market is going to move a lot in the very short term, literally 1 day, 2 day, 3 days. So, I mean, we're already down 1.5% for SPX. So that just means we're going to move a lot. And would it surprise me if we were up 50 handles in the SPX on Tuesday, after the holiday? Everybody gets back and goes, whoa, wait a minute, buy. So, I mean, a lot of people are out already for the holiday. So it doesn't surprise me hugely that we could be down easily right now.
No, yes, it has been a fascinating time to watch all things volatility. We were talking kind of broad S&P volatility. Let's dive on into. Sean can't be here, so let's get into the Russell 2000 vol as well. Russell, the small caps. Mr. Rocklofter, it's funny. People have been talking and telling us for a while here that small caps kind of insulated from the big trade war macro trends. Yet that's not what we're seeing in the marketplace. They're moving, and in fact, coming into today's show, we're seeing the Russell 2000 off about 2.5% on the week. So big moves out here in Russell 2000 land. Vol, as you might imagine, up strong. We just mentioned the RVX at about a 21. We're seeing similar kind of levels across the term structure here with big moves of 2 points or so, if not more, as you get closer to the front portion of the curve there. In terms of, we're at about a 1,500. 14.99 actually coming into showtime out here in the Russell 2000. So let's see what was lighting it up. OI, let's see OI really quickly here. Up actually pretty strong, about 5.5%. So a pretty robust week for Russell 2000 options. The big action, you might think, the par puts, 1,500 puts, and they were pretty active in the front week. But no, we actually have to go out here about a month or so. These have about 29 days exactly till expiration here. The 1360 puts were where the action was this week out here in Russell 2000, which is kind of surprising. I would not have picked that on my first blush, and they traded pretty evenly throughout the week. Pretty much the same numbers going up Monday, Tuesday, and Wednesday. Actually, all of that looks like it was closing. So looks like maybe some folks taking advantage of a little bit of downside to take off some hedging, some speculative bets maybe they had to the downside. Or maybe they were writing a line in the sand, and they got a little bit spooked either way. Closing out far to the downside in the Russell 2000, since that was where the lion's share of the volume went up this week. Let's look really quickly at the skews out here as well. You guys can, of course, do this yourselves at cmegroup.com/TWIFO. If however you're logged into Quick Strike, go into that 25-day quick skew column. You could see, let's see, the puts are a little bit juicier this week. Go figure. They were about 15.5% rich at the money last week. This week, they're about 17%. So right about 1.5 points. And the calls getting a little bit cheaper. So off about a handle. They're 12.5% cheap to at the money. Now they're 13.5% cheap. So moving down, calls getting a little bit juicy. Puts getting a little bit juicy, calls coming in. That's kind of what you expect with a little bit of an aggressive move here to the downside. Let's flip the script over here to the S&P, E-mini S&P. Let's see if they're seeing a similar narrative playing out there, or if something else is afoot. Remember, listeners, I like to choose the select all mode. You guys, pick your poison. It's a lot of data, but I kind of need it when I'm doing a show like this. S&P coming into showtime a little bit north of the 2,800 level, 2812 or so, 2811. We're off, a good 50 handles on the week, nearly 2%, 1.75% here. And we're talking 2,800 levels. So you probably would think that would be where the leading action of the dance was, and you would be incorrect. Actually, it is, let's see, where are we? These are week 2 in June. These are week to June puts to the tune of the 2,700 puts, lighting it up this week. 72,000, almost 73,000 of those. And I take that back, actually. I'm sorry. Those are regular June 2,600 puts did the 73,000 of were leading the dance here. There was actually in the 2,700s as well, but 2,600 puts, pretty far, 200 handles out of the money in June, leading the dance. Let's see what was up here this week, listeners. All of that pretty much coming today. 62,000 going up to that. Just shows the kind of numbers the E-mini can put up when it wants to. It looks like maybe some verticals or something else going up. 27 halves also doing 21,000 today, so it's not quite 1x3, but it's pretty close. I don't think all that paper was in the 1x3, the listeners. But still, the rest of the week, the 2,600 puts were pretty light, 4,000, 4,000, and 1,400 respectively. So not a lot of paper until today. Well, it looks like something was lighting up the dance here. And maybe looks like, I'm going to guess maybe a bit of a vertical, because something was driving size paper, and maybe 1x3. I don't know, Mr. Rock Lobster, does that float your boat here? 2,700, 2,600, 1x3 put spread in the E-mini. Does that get you excited, sir, or does that get you terrified?
Well, you look at it, like people are, I think it's, it probably, if they've done it for even a credit or maybe a small little type of credit thing, they're not looking for the market to fall apart, but they're trying to find a trade for when the SPX just orbits up back and forth. And we're not, I don't think we had an all-time high when we were sure that the deal was going to get done that week. So we know 29.50 is up there. But on the downside, we haven't really been able to crash yet. The economy is going to go into free fall if we don't get this trade deal. Nobody's buying that yet, although they did think that in December, if you recall. So we know how ugly things can get if that's what happens. So, and then we had the Volpocalypse. That was another one. So that exists, the fact that all that stuff can happen. So what I would say is that we're looking for that type of trade. I see that 1x3. They're like, okay, where it could go down, but mostly they're just also looking for a way to sell vol with the 1x3. Because those three contracts, it's a margin trade. It's kind of, I would just call it a big boy trade or a big girl trade. They're looking for a way to sell vol, and they don't really want to use, let's say, the VIX or a vol product, because those products are so directional. So directional. You're taking volatility, you're turning into a direction, right? So, but there are other ways to sell volatility. You put on the 1x3 in this big, massive thing, and it sells a lot of juice. So, if you're somebody that's long a lot of treasuries and you're sitting on a ton of treasury, paper gains right now, you sell some of the downside juice. The 2,700, 2,600 gets you to 2,500, or at least 2,550 as far as SPX goes, which I'm not going to say we can't get down there. We certainly can, but that's a long ways away. But I think this is, I would say, a savvier person with some margin is selling some volatility. They've seen this movie the last couple of weeks. It's a Friday. We have some tweets. The Chinese now can tweet. The president tweets, and vol goes down. So anyway, that's what we got.
Sounds like your GPS is going off. You driving somewhere, sir? Don't crash, whatever you're doing over there, sir. But yeah, you're right. This kind of is harkens back to a trade we were just talking about on the option block not too long ago, where people are asking about drawing that line in the sand by writing puts, and there are more nuanced ways to approach it. Maybe like this, maybe not quite. Maybe you don't want quite the 1x3 ratio, but a ratio does take advantage of that, particularly if you're buying a little bit higher up and then selling a little bit farther down. Gives you that runway, like you mentioned in this case, somewhere down to around the 2,500 level. In that case, you got a little bit of profit before you break through. You're not just hitting a strike, you're short and blowing through it. So a lot of things going on, and it also gets you long where you want to be, and it gives you a chance to actually sell some volatility, sell some skew. So that's kind of an interesting, again, I'll have to dig in a little bit to see if that was the case, but at first blush, it does have that feeling. Let's look really quickly, too, because the NASDAQ's off quite a bit as well. The NASDAQ's leading the dance this week, off 3% on the week. So it's leading the downside as we're seeing, names like Tesla and others are feeling the heat as a result of not just the trade war, but other issues. And that's all conspiring to drive the NASDAQ further to the dark side here. Again, off about 3% or about 220 handles. 72.80 is right, 81 or so is right where we are. And leading the dance this week are pretty much front week puts. That's kind of what I thought would be the case in most of the equities, and it wasn't. But in NASDAQ, that is the case. Again, the NASDAQ 100 options don't do a ton of paper here, but they do a decent amount. Certainly it's no E-mini S&P, but still doing about, looks like a pretty decent amount of the 7,200 puts going out tomorrow. So they're pretty active. Let's see if they're trading today, even with actually doing pretty steady paper throughout the entire week. So again, people like themselves a little bit of weeklies, maybe harvesting some risk premium. Maybe they're just hedging either way. Near-term downside. The order of the day out here. Speaking of the order of the day, Mr. Rocklaps, I'm not sure if you've been paying attention, but in the equity space, particularly when it comes to like futures and futures options out here, all the oxygen in the room is getting sucked up by these micro futures. We had Tim McCord on the show a few weeks ago, listeners breaking down these micro E-minis. And apparently you guys are responding en masse. These things are just lighting up the tape. I think they've said now, CME, this is the biggest new product launch they've ever had in terms of just rapidity of adoption. Over 5 million plus contracts traded. And that was 3 days ago. That was on the 20th. So it's more than that, probably 6 or 7 now, given all the movements. I don't know, Mr. Rocklobster, have you been paying attention to these? Any of your crazies in your pitch chat? It's an interesting idea, taking, the E-mini and making it even more mini, if you will, going micro, making it more palatable and also more nuanced for some of the savvy people who want to do a little bit more, nuanced size in the E-mini space, sir.
Well, I think it makes an easier hedge too. So let's say if you're trading SPY and you want to scalp something, you can use the futures where the margins treatment's better, right? So that could work. But you remember the micro options or the mini options where we had Apple, Google, and all those?
Oh, do I? What a success they were, sir.
But apparently, smaller futures get people more excited. So, and I think futures do have that sort of, let's just call it the immediacy appeal of a future, where you can buy them and sell them. I used to have fun trading them in the SPX. When I got the hand signals right, and I didn't screw up what I was sending to the to the ARB clerk. But that as far as, but it doesn't surprise me hugely that, the E-mini is a popular product and it's part of the thing that, you see on the other option programs, but, people want to trade them all day, all night. And now you can sling a 10 lot and it's not costing them an arm and a leg anymore. So it has that immediacy appeal to it.
Yeah, I guess everything little is big again, sir, because you're right. These micros are freaking tearing it up. I think they use a technical term out here right now. You guys certainly are liking it. I'm hoping this rapid adoption will lead to more options on these bad boys. And you're right, it is very fungible with the other contracts, so you don't technically need the options right now, but it'd be nice. We always like the option on a mini micro future. Kind of fun. All right, let's keep on rolling. It's not fun. Big movers to the downside. We talk crude a lot, but this week it's really leading the dance. In fact, I do think it's our biggest downside mover. We'll get to that in a little bit when we get to the movers and shakers over there on the futures side of the fence. But yeah, crude, I think the technical term is taking a drubbing off 8%, almost 8.25% this week. Blowing through the 60 handle to the dark side. We're at 57.75 or so coming into showtime. So all this hand-wringing, will we maintain the 60? Maybe will we break through 65? Will we threaten 70? Nope, forget all of that. We're going back to the dark side here, way south of the 60 handle. Last week it's kind of interesting. It's a bit of a flipping of the script from what we saw last week. Last week we saw, maybe we thought some concessions in the trade war, maybe moving to progress. On the flip side, we saw Mideast tensions, and the Mideast tensions were trumping the U.S. stockpile story as well as the Chinese demand story. This week it's flipping. It's all U.S. stockpiles and Chinese demand. The heck with the Middle East, because it's taking it all to the downside here. We saw, plunging numbers pretty much the last couple of sessions. We saw inventories here in the U.S. Jumping to their highest levels in pretty much a year, since July, actually 2 years, 2017. So that's enough to spook the market here, and of course China continuing to fuel the lack of demand, shall we say. So that combo is pretty much a 1-2 punch here for a little bit of weakness, a little bit of downside here from the crude. Of course, we also saw some weaker economic data coming out of the EU and Japan as well. All of that kind of weighing on the energy side for this here. So a lot going on with this space. Apparently, the Middle East tensions, not enough. Even though the fact that we're talking about troops and all these other things, all that, not enough to really to spook. We're sending carrier battle groups, not enough to send or keep crude, I should say, above the 60 handle here. So we're right shy of the 58 handle here. Listeners coming into Showtime, you can pretty much don't have to ask. Vol is up and up pretty hard, up about 4 handles across the board. You get a little bit farther out here, you get into March of next year, it's up 9 handle. That seems like it might be a bad print. I'll have to go check the 10 handles, actually, if you get to Jan here. So beginning of next year, Jan and March, I'll have to look. Maybe there's an OPEC meeting scheduled there, something along those lines, because vol up strong in that part of the curve here. And in terms of where we're seeing the action this week, well, overall open interest up only 3.5%. So given all the action out here, you haven't seen as much of a commensurate move in OI. But again, it's a pretty liquid product, so it takes a lot to really budge and move those OI numbers. Leading the dance here this week, we've got, where are we coming here? We've got July. It's July leading the dance with 51.5% of the paper going up all in July. Let's see what was leading the dance here. In July, it was indeed, so I said we were at about a little bit shy of the 58 level. And go figure. You guys have been fascinated. You've been glued to that 60 strike for a while. That continues to be the case, even as we blow through it to the downside, doing more volume later this week as we've blown through it, which is kind of interesting. Total of about 16,000 contracts on the tape here. The lion's share coming yesterday and today. 5,000 yesterday, 6,000 today. Again, that kind of also correlates with the downside move. But still, as we're going to that 60 strike, you guys were fascinated with it. Also seeing a lot of action out here. And let's see, it's not all puts, but it is a lot of puts. We've got kind of pretty much a tie for number 2 between 65 calls with about 11,300 and the 58 puts with about 11,300. All of that, again, out there in July, both doing equal numbers and pretty active. As you might imagine, the puts doing the lion's share today, actually, 6,600 today. The calls kind of evenly spread throughout the week with a good chunk coming Wednesday and today as well. So there's been a lot of action across the board, but it is puts kind of leading the dance, as we are wont to do here. Let's look really quickly. Guess why I like to choose a select all, listeners? It lets me see in one fell swoop exactly what's lighting up the tape, see if any crazy, aberrant, interesting prints are going on out here. I don't see a lot of crazy stuff. Double puts lighting it up out here in August. Not a ton, about 6,000 or so. That's probably the most aberrant print we're seeing out here. It's not a lot of craziness, but still interesting stuff. A lot of paper. Let's look at the skew really quick, too, before I get the rock lobster to weigh in. As you might imagine, the skew is moving, given the big move we're seeing out here this week. We'll go to July. That's where the paper is this week. Last week, July puts were 9.2% risk to the at-the-money. This week, they're actually coming in a bit. They're a little bit shy of 7.9% risk to the at-the-money. Calls are about the same, about 5.5% cheap to the at-the-money from last week. So the calls haven't moved a lot. The puts actually coming in. Usually you see an aggressive move to the downside. You might see a little bit of a spark of life and vol like we saw in the equities. But if you're kind of sliding down the skew a little bit, you're going to see those puts actually come in. That's kind of what we're seeing here, which is kind of fast. It's also could be reflective of the paper. People could be not buying this and hitting the bid on a lot of those puts, and that could also reflect that as well. So interesting stuff here going on. We're also seeing, of course, OPEC meeting. Supposed to be for the 25th of June, now delayed until the first week of July. Maybe some of that also weighing on the market here as well. Mr. Rock Lobster, I know you don't sling a lot of energy. When you do, you like the USO, but do you look at a lot of WTI? And what's catching your eye in energy vol in and of itself? USO, WTI, wherever you're playing, sir. What's catching your eye out there?
We do have guys that do it. In USO, actually, we're just looking at some of my chat room. Guys are starting to close some of the other side of their strangle. So they were long. I think they were long the 13, 14 strangle in USO. So that kind of equates to what, 65, 60, I think, in WTI or something like that. And they had the 13 puts that are I think they paid like 30 cents or 40 cents for the strangle that they bought, and it is now worth over $1. So there are some celebrating, but this is a huge move. Um, One thing I just thought vol has been low in the oil complex, I think, over the last month. Like things are going crazy, but you could buy oil volatility for damn near nothing. I think up until today, basically, because now the vol's in the 30s. It's been in the mid to low 20s. I think here for, I'm just checking, I got to make sure, but it's been there for like, I don't know, 2 weeks, 3 weeks. Vol has been like ridiculously low. Yeah, you could buy even, let's say 2 weeks ago, you're paying 26 volatility for, a 180-day vol in USO. So, and that is very near the bottom of the range for that product. So WTI would be the same because it's all kind of fungible. And yeah, up until even like a couple weeks ago, literally 1 week ago, you could buy volatility near the 1 year lows. So it wasn't hard on the 1 year low, but it was pretty damn cheap. But it ain't that way today. So it's kind of a strange looking candle with the way the price of oil's been going. So yeah, they dumped their, I believe it was like they had the June 14, 13 strangles. They bought them a while ago. So they made a little money on the upside when we had that rally. And now they just have all these puts sitting around not doing anything that apparently is something. So it looks like it's a strange, I would call a strange price break in the price, to be honest. So it almost feels like everybody's already gone for the holiday and there's just no liquidity anywhere in any product anywhere.
That could be some of it as well. You know, we're heading into the long Memorial Day holiday weekend here in the States, listeners. Yeah, you're right. USO off 3/4 of a handle, nearly 6%, right around the 12 handle right now. So yeah, that strangle looking pretty good. Right now, and I know you talked about it before. Do you lump USO into the predictably crappy kind of range that you'd put like a VXX and others? Or does it hold a special place in your heart? Where do you put USO in the great pantheon of commodity type ETFs?
It is. I mean, the ETFs, they suck relative to the futures. I mean, futures are the things that move, and the ETFs are kind of for like lazy equity guys. So the futures are the things that actually move. And they have some leverage, but every once in a while. But yes, I would say it is the predictably crappy rolling contango type product like UNG and stuff like that. And VXX, where these products buy futures, but they, it's always kind of a slow decaying asset that they're buying. And I mean, it's not like they can't go up; they can for sure, but if one is buying them, you have to be careful of that what we'll just call predictably crappy price action when nothing's going on. They're like, oil's price isn't going down. How come the ETF is going down? So it gets in that category. But even like not very long ago, we were starting to see like $75 barrel oil of October or something like that, and it seems a long way away now.
Yeah, it does. It's one of those things. The old USI. Listen to me. The old USO versus WTI debates will continue to linger for a lot of people out there. Right in the equity space, USO is kind of their gateway. It's kind of how they get into the energy space. Maybe they're intimidated or they don't understand the future. Maybe they're not listening to a show like this. Go figure. How could they miss it? But maybe they're not. So they don't see the volume and the things that are going on here in the futures option side of the fence, and the fact that the futures move. So at the end of the day, if you want something that's keyed to what the asset is, going directly to the asset as opposed to some hybrid intermediary that attempts to construct it in some sort of Franken way is probably easier. I mean, USO can perform. We've seen it right now, but you're right. It's got the same issues that drag on a VXX and others with the term structure and the roll yield, all these other crazy things, and the fact that they're trying to approximate something that already exists elsewhere. So if you listen to this show, I'm guessing you're already down the rabbit hole of the futures options, and certainly the volume is attesting to it. But interesting stuff out here. So big moves like this, you can still get some play even in a thing like USO out there as well, which I know is a vector for a lot of you out there. Let's go. Speaking of vectors and what's trading, you guys are always asking for more ags. I think we can get to a little bit of that this week because the ags, again, trade war, ags are kind of ground zero for all things trade war. We talked beans last time. We're going to flip the script a little bit. We're going to talk corn this time. Mr. Rock Lobster, honestly, you could tell me, when's the last time you talked corn, sir?
I think the last time I talked, what was that? Didn't we have a drought like 5 years ago or something?
Yeah, probably. Or maybe the last time you were on the show here with me. Maybe I dragged you into the almost literal weeds of corn. But we're going to go there again, sir.
I do have one of our clients who's a fairly big farmer, but he grows hops, so that's kind of a sideways thing. But I think the government is kind of doling out some subsidies and stuff right now. How is that? Is that kind of propping up corn prices?
I don't see hops here on my list of size options product. I'll have to dig in, see if there's a size options market for hops here. Stay tuned for that, listeners. Hops, we'll see. That would probably intrigue a lot of our listeners. I know the bacon got you guys all excited last week. Maybe hops will follow suit. But corn moving this week up about 2% or about 7 handles. It's a pretty decent move out here in corn to the upside. Maybe you were talking about before, Mr. Rocklauser, about some of the subsidies. Just volume-wise, that's kind of what drew our eye to it. Setting a new record for volume. Again, we're getting a lot of wet weather out there. Plantings getting a little bit delayed as well. All that combining to set a new record. Again, a couple of days ago, 21st. Big day for a lot of contracts, including corn, with about 420,000 contracts. That's an overall options volume new record out there. So big action out here in corn. So we're hovering right around the 390 level coming into showtime here. Listeners, let's see. The vol, of course, people always, conflate downside with volatility, but in the commodities, it could be upside, and movement in general also equates to volatility. So we're seeing a little bit of both here in terms of the vol going up on this upside move here. Up pretty strong here. Look in here, some of the term structure up 3 handles, 4 handles, 5 handles as you're going out a little bit more out to, even not that far, out to July and June. So, yeah, big moves in vol here. As we're seeing some commensurately big moves here in the underlying. Let's see. The action this week was pretty much focused out here in July and June, about a little more than a third, about 34.5% of the paper this week going out in July. So let's look at the skew out there. And the skew in July moved, as you might imagine, pretty big to the call side. This is kind of why I like the commodities, Mr. Rock Lobster. Because equities, you're always talking a bid to the puts and a discount to the calls, right? The slope of it may change, but the shape is very rarely going to change. Whereas in the commodities, it's all over the freaking place, which makes it fun. Like this week here, Mr. Rock Lobster, the corn, again, you can find this for yourselves, cmegroup.com/TWIFO. Go over to ags, pull the corn drop down, move on over to the 25-day quick skew column. You can see all of this for yourself. A week ago, the puts haven't changed too much. The puts were about 9.6% cheap at the money. This week, about 10.3%. So getting a little cheaper, actually, while the calls are on a rocket to the moon, I should say, and the rocket to the moon, interestingly enough, not the way you might expect, not shooting up to the upside, but a rocket to the moon in terms of crashing back down. Rocket to the moon to the downside, shall we say, they were 15.5% expensive, actually, to theirs. They were expensive to the at-the-money. So the bid was in the calls, and coming into this week, it's changed. It's actually the opposite. It's down to 8.4%. So we saw the move. And maybe early on people were piling in, but towards now, coming into today, we're seeing that vol coming in. So maybe the move has mitigated a little bit. Some of that upside initial juice you get on the first big blush starting to come in a little bit, or maybe people are taking their profits and dumping them. Either way, the vol coming in aggressively. So people obviously maybe were shaping up for this move ahead of it and taking some of those profits off the table. The big move, we're coming into 390 strike today. Not the big move, but the big trade out here this week, the big contract, number one with a bullet, are the 400 calls again out here in July, doing, 54,000 contracts. A big day, a big week, I should say. 20,000 almost on Monday, 18,500 on Tuesday, which was the record day for corn volume, and about 8,000 each yesterday and today. So a good chunk of that opening. So opening upside calls here in the corn land. I don't know, Mr. Rock Lobster, we talked about USO, we talked about VXX before. The commodity ETFs are, I think, a more paltry affair for the most part, kind of sparse pickings. Would you agree? Are you a big fan of, I know there's things like Bale for cotton and a few other, corn, there's a corn ETF, but do you watch or any of your crazies trade these in the pitch chat, sir?
No, we only have traded them once when there was like a crazy squeeze on them. I think we have a crazy drought a few years ago or something like that.
You love this drought. You keep coming back to this drought.
Yeah, well, it's the only I remember. But they're what in soybeans, SOYB, the Tecrium soybean thing. So beans have not recovered as much as corn has. So I guess, and I don't know all the ins and outs of the ags, but they don't trade them that much. But there's a little volume in them. But at least as of right now, it looks like beans have not gotten off the map, off the basement floor, maybe a little bit. Nothing like corn has done though. So I don't know. I guess who else grows corns besides us? The Russians and I don't do that. The Chinese must grow a lot of it. I don't know, but it's at least for that point of view, corn has come back from this trade thing. Maybe it's just the subsidies coming in. I don't know if that would actually push the price up or just give farmers more money. I'm not quite sure how all those dynamics work.
A lot of dynamics in the ag space and a lot to unpack as you're trading them. Let's jump on over to another area where I think the ETF field is a little bit more robust. And I know you trade and a lot of your clients trade a lot more actively than corn, Mr. Rock Lobster, which is, of course, the metals. Too bad Uncle Mike couldn't join us. He's a big metalhead out there, pun intended. But he is indeed ill today. He likes his long-term silver. We're going to get into gold here instead. Interesting. Everyone's been hand-wringing on the 1,300 level for gold for the last couple of weeks here. Once you break through it, that's all anybody's watching. We saw a bit of upside this week, up not quite 1%, but pretty close to it. We're seeing dollar kind of coming off and all these macro tensions, and that's given a little bit of a lift to the metals across the board, including the shiny stuff, the gold, at about a 1285 coming into showtime, up about 9 handles on the week. So we are seeing a little bit of upside make the gold bulls a little bit happy out there. The gold bugs, we know you're out there. We hear from you all the time. You guys liking yourselves a little bit of upside, not liking the vol, because it's not, gold vol, and we talked about this before, Mr. Rock Lobster. Gold vol has kind of been an interesting beast. It's been in the doldrums for almost as long as we've been doing the show. It never really can catch a bid, and if it does, it doesn't maintain it for long. Is that you kind of read on gold vol as well, sir?
Yeah, what is it back? Is it back in the single digits again?
Yeah, it's at an 8. It's at an 8. It's at a 7 to 8 in the front couple of months. Yeah,
I think the Fed ruined it. They killed it. Everybody thought, remember, we're gonna have all this runaway inflation, and it never got anywhere. I mean, we had that crazy run up in gold, and now I think the gold bugs, some of them just got hurt. But I mean, the one thing is vol is in the single digits. So even when you're buying it, you don't have a lot of risk in single digit volatility, as long as you have enough time. So, and I've been looking at silver too. Actually, one of our traders in our chat room mentioned silver, and I'm looking at the vol. I go, my God, it is dang low. So it's one of those things where it's cheap enough. So I trade mostly directional vol on products. I don't really care what the underlying does. It's just what it presents from a vol point of view. So I'm trying to price range. Gold and silver vol both look fairly inexpensive, even relative to any kind of a 2-month hold. It just does not look that expensive. So whether you're buying it, the future option vol, it's all going to be kind of, those complexes are all sort of connected. So the vols aren't going to be too different. But I mean, right now, gold's kind of sitting and bouncing around, close to, lows of the year. Not right there, but it's just bouncing off those lows. Everybody's like, okay, it's almost like, is this trade war going to be something? And then gold flies. So, on a day like today, falls up a little bit, but volatility in gold is up 24 basis points. And the market is almost, it's a pretty good sell-off in SPX. VIX is doing relatively little for it. So you would think, okay, gold vol would really be moving, and they can't get off the basement. Even if I look at silver now too, can they get off the floor? 22 basis points in silver. So it's nothing. It's just, you're not paying anything. You can get by 60-day volatility for 14%. It's just, it's not that much. It's not that much in the product. So I think if you're going to buy something, it's not going to get a whole lot cheaper than it is right now. Any of the metals, at least the two big ones, silver and gold.
It seems like we've been saying that for a while. You know, my cohort here, Nick, he's often said many times that gold is one of those things that's kind of deceptively cheap. It is cheap, and yet, as he terms it, it pays the rent, which is a metric I've been telling them many times to try to build into the quick strike here to see which names are actually paying the rent. Because it's cheap enough, you don't have to spend a lot to get it, and you get just enough of a move that if you're hedging aggressively, you can make money on it. And it's kind of been that way for a while. So you're right. It's in the floor. It can't really go much cheaper.
And that's why we have our Edge Hunter sheets. It does the same thing when vol's low. You can see what it pays for 22 days, or it works all that stuff out for you. So it on all my sheets it says it's a buy, but and I'm gonna actually in about 15 minutes I'm going to do that with some of our clients going through our gold lab. So I think it's extremely reasonable buy. Let's put it that way. A reasonable buy, if I can spit that out.
I mean, look at it this week. It's up nearly 1%, and it's a pretty much an 8% vol, right? So I mean, it does seem extremely reasonable. Yet we've been saying that for a while. So if you're expecting this huge explosion when you buy the gold vol, maybe not so much. But if you're a little bit deft, a little bit savvy, you can get in and out and scalp and get your levels. Then it will quote unquote pay the rent, to borrow from my compatriot there, Mr. Nick. There we also saw other products coming on the downside. Platinum going down to a 3-month low. Don't talk about the other ones, the other precious. They don't do a huge amount of options volume, which is why they don't come on our radar too often. But we saw platinum coming off as well as palladium. We talked about that before, I believe, with Blue on the show not too long ago. It hit 1,600 in March. Now it's down to about around 14.5 or even below. So we're seeing downside moves in a lot of the other metals, and overall, not lots, but a decent amount of upside here today in all things metals. Before we get some of your questions, let's break down the week that's been out here so far over there on CME. The big movers and shakers, what's really moving. These are just pure futures underlying moves, listeners, not open interest or not volatile, anything like that. Just straight up how much the futures are moving. We already broke down the downside. So let's get to it. Number one on the downside is WTI off 8.5%. Number two, we got heating oil, so a lot of energy here, about 8%. Number three to the downside there, Brent following hot on its heels, about 7.7%. Number four here, we've got good old RBOB, the gas, a little north of 7%, about 7.15%. And rounding out the bottom five there, we've got the E-mini 100 here, NASDAQ 100, with about 4.25%, at least at the time this was put out. I think it's a little bit less than that now. And then we've got, what have we got here? To the upside, let's go from bottom to top this time. So starting off here, let's go from top to the bottom, make them front. Top, number one big mover of the week, rough rice, about 6% to the upside. Number two, iron ore, up nearly 5%, about 4.9%. Number three to the upside here, oats, up a little north of 4%. Number four, the euro dollars, up about 3%. Round out the top five here. We just talked about it. Corn, up nearly 3%, 2.77%. Now it's time to see what you guys have on your brains with a little bit of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody. Let's see what you guys have on the old brain with a little bit of your feedback. Kick things off. Bilcan. Maybe Bilcan. He wants to know, why no Bitcoin options yet? You've heard me. You've heard me on this very show, listeners. I put it to Tim McCourt and the guys at CME who run that complex over there. Why don't we have these yet? They kind of talk about how they want to see more volume and things like that, which is understandable. But the volume is getting up there. We're seeing a lot of records pretty much all the time. ADV up nearly 300% for the futures in April alone for the Bitcoin futures. So it's getting there. I think we're at that cusp, listeners, where I don't know if we're going to be seeing them anytime in the next few months, but let's see. If I had to guess before the end of the year, Bitcoin options, I'm going to go out on a limb. Yeah, I'm going to say yes. I'm going to say yes to Bitcoin options. Mr. Rocklops, are you crazies? Are they asking for crypto options, or are they just too busy slinging their corn?
They're slinging. Of course, when was it? Bitcoin just doubled. No options on it. Can you imagine?
I know. We had no options from 20,000 down to 3, and then all the way up back to 8. No options anywhere in sight. Come on, you're killing me.
I mean, as long as there's an underlying, I think options would trade. I think that's the key. If you have an option product, you need an underlying. So I think they would trade, and I think they should list them. As far as settlement and delivery goes, they can figure that mess out. But I think they should have them. If they can list the futures, they can list the options. It's just it would be a bit of a wild west. But there has been interest in them, but there's less so now that Bitcoin's whatever. I even people would want puts again, so I can imagine what the demand would be for those things. But there has been interest in it, so we'll see what happens.
I know for all of you listening to our crypto show, before you write into us here on this show, and we know there's options on BitMEX and Deribit and all those things, but we want listed, regulated venues to list an actual product people can watch that has actual volume you can sink your teeth into. And there's decent stuff on Deribit, of course, but listed, regulated U.S. venue that lists and options would be nice. And seems like CME is the dog in that race to bet on. All right, let's go here. And again, to answer your question, I don't know why, but hopefully soon. Bilcan. Here we go. All right. CL Dance. It's a good one for you, Mr. Rock Lobster. He wants to know, why is S&P volatility the only one most people pay attention to? We just broke down a lot of different volatility in Russell, volatility in NASDAQ, volatility in S&P. But you're right. S&P does kind of lead the dance. Mr. Rock Lobster, why is that? Is it just because it sounds sexy to say the fear gauge? Is it because of the VIX? Should we blame it all on the VIX?
You know what? The thing is, it's just everybody watches the SPX. That's the reason. It is a hugely quoted product. It's the SPX trades on the Merc as the E-mini and the ES options. They're massively traded, and basically that's the pulse of volatility. And for whatever reason, that is the one that has caught on, maybe due to the SIBO promoting it. And it's one of those things. It's like, why do they quote the Dow, or why do you quote the SPX? It's just it is a good indicator, and it's the one everybody uses. And to be honest, it's a pretty useful indicator. And also look at all the products that are connected to it. I mean, there's so many besides the futures and the ETNs and all that kind of stuff. So there is a lot. I would like it if the Russell took off a little bit more. That would certainly make things a lot more fun, especially with the ability to trade the two products against each other. You buy the cheap vol in the SPX, sell the expensive vol in the Russell, stuff like that. I mean, you can do that with the regular products, but having the clean vol product against each other would be kind of fun. So that's why it's just that's the stuff that's traded. It's also a ton of stuff, like everything is indexed to the SPX. Every fund, everything is indexed to the S&P 500. A lot of stuff that trades upstairs, variance swaps and all kinds of stuff like that, they're all SPX indexed. So there's a lot of reason, because that's the bad boy that trades. That's, I guess, the simple reason.
Yep, you got to follow the volume at the end of the day. But you're right. The reason Sean's not here is because he's out there getting volume for those Russell options, which are starting to light it up quite a bit. So there is a growing story in those other products, and certainly, as you mentioned, spreading between them is a fascinating area. That as the liquidity grows in all of them, that makes it a lot more interesting. So we're looking forward to that. You guys have vol clearly on the brain this week, so we'll take it home with this one. This comes from Frank. Frank wants to know, he sends us a link to an article. I think this, let's see what this is from investing.com. It's about gold vol versus oil vol. He wants to know, what do you guys think of this article? Spoiler alert, Frank, I haven't had a chance to read the whole thing, but the second part of his question is interesting. He says, do you guys ever use the commodity volatility indices in your analysis? And the answer is yes. We use those quite a bit. And what he's referring to is there's a bunch, well, not a bunch, but there's a few different ones. You can pull volatility, obviously, from any from any source. They all have volatility. We do it here on the show. But in talks of widely disseminated indices, there are a handful. We, of course, talk OIV on the show quite a bit, which is the volatility index for WTI, for crude oil. So we use that a lot to kind of as a benchmark, as kind of a bit of a bellwether to see how volatility is shaping up across the broad spectrum. It applies that same essentially methodology of the VIX to something like crude oil. Right now, it's at about a 30, almost a 33, 32 and a half, up nearly 5 handles. So that shows kind of just how much that thing's been rocking and rolling of late. We had our buddy Russell Rhodes on down at the Options Industry Conference. He was talking about how much energy volatility, how much he's going to start focusing on that a lot more because he thinks that's an opportunity. When it moves, it moves. Everyone always fixates on equity volatility, but commodity or energy volatility is certainly another one. There are other volatility indices for things like, of course, if you like USO, there is OVX. We don't really use that as much because we said before, we're not huge fans of USO here. In terms of things like GLD, there are commodity indices for that as well. But and there hasn't been a lot going on that side of the fence. So if I had to say, Mr. Rock Lobster, the one I use the most, definitely OIV. We use it to kind of set up a framework. It's a good benchmark to keep in your watch list to kind of see, hey, are we pushing a 60? Oh my God, things are rocking and rolling. Are we down in the 20s or teens again? Okay, things are kind of light. It gives you a good barometer for how vol is shaping up in crude oil, which is a useful thing if you're trading this space. Mr. Rock Lobster, is that the main one you use? Are you more of an OVX guy? Do you use some of the others? What do you use out there, sir?
More OVX. That's the SIBO VIX one, I think, because I am just ridiculously equity index product stuff. So, but I think with those indexes, it's once you follow one, it's good to learn what's going on. So if you're going to be interested in these products, you should learn the vol indexes and learn the vols of the products, especially with commodities. There's huge opportunity in that stuff because all the vol whips around, the skews whip around. You guys even have that fancy skewulator on the CME website. So that's, it behooves you to see that stuff moving because you get a lot of information what the market's buying by what's going on with all the products.
Oh, there we go. I was talking. I pulled the rock. See, look, I have you on my show, Mr. Rock Lobster. You infected me. I actually somehow muted myself, which is impressive.
Blaming me. Well, just go kick the dog.
We all know whose fault it is, sir, and it's definitely yours. All right. See, getting all this good stuff going, keeping things moving behind the scenes, Mr. Rock Lobster. Throwing me off my game. But, interesting stuff here. A lot to unpack. Unfortunately, that means we have done it. That music means we've come to the end of another epic, exciting edition of TWIFO. Before we go, listeners, of course, you can check out, cmegroup.com/TWIFO is the place to go for all of those fun tools. If you want to kick the tires and actually maybe sign in and try them for yourself, Quick Strike, QUIKSTRIKE.net or Bantix, BANTIX.com are the places to go for that. Tell Nick you heard about it on the show. It'll bring a smile to his curmudgeonly face. And, of course, we're talking about it before. Sean's out there getting more volume for you guys out there in the Russell options. So make sure you're trading them. Get out there and trade them up so we can get more products in the Russell space, which is what we all want, including the return of RVX, which is, it's out there listed. We talk about it, but we want it to be, and disseminate, we want it to be tradable. So if you want more volatility, we're just talking about volatility indices. If you want tradable Russell volatility, make it happen. Get out there and trade or hit them up at FTSE Russell. Let them know you want to see those products listed, and maybe we'll see them sooner rather than later. And before we go, Mr. Rock Lobster, people are intrigued by your gold analysis or your forthcoming corn volatility newsletter. Where should they go? What should they do, sir?
Jump on over to optionpit.com /events for our Pro Trader Summit. Also, I do write a vol newsletter if you want to understand about the VIX future things and stuff like that. I do a live class once a week. People like it, so come and check it out.
Check it out. Indeed, optionpit.com is the place to go. If you're going to be in Chicago and you want to meet them in person, maybe I'll even be there as well for a little bit of education on the volatility side. They have the Pro Trader Summit coming up in a couple of weeks here. It's pretty fun. Tasty, delicious steak at Gibson's, all that good stuff. Check it out. Optionpit.com is the place to go. And on behalf of the Rock Lobster and even Nick and Sean, who couldn't make it, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for sending in your questions, all that good stuff. Keep it coming, and we'll see you back here next week for more of This Week in Futures Options.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.